All right, initially gold up, dollar down again. Oh my goodness, that's a lot of red coming in. How does ISM PMI affect indices? It's actually really important. Let's see if we get any market moving news from PMIs here. So I've got S&P bottom right, dollar top right, gold and euro. And guys, we are about 15 seconds out from this really important news number. So let's go to breaking news coming in hot. All right, initially gold up, dollar down again. SP500
jumping.
Euro moving higher. Frank, if you see those numbers, feel free to share them. Look at that gold wanting to go here. It's
even lower than expected.
Was it? All right, guys, let's get the number here. What was the number, Frank?
$150K.
What was it?
150.
150. Oh my goodness, that's a lot of red coming in. Frank, 0.2% on the average hourly earnings. We like to see that, guys.
Wage growth slowing.
That is what we like to see. That is, well, okay, so we get a little mix. You know, Frank, that's a number that we can work with.
So I had actually kind of a bullish idea for both sides of the coin. If NFP came in hotter, as it has been, as long as we saw a slow in inflation, which would be CPI, but wage growth is also very important for an inflation indicator. So seeing that lower than expected, it essentially remained unchanged, but seeing it not move any higher while, you know, we've seen a ton of jobs added in the last 2 months, I think that's a good sign, especially now that NFP is lower too. That's what traders want to see. Powell did mention, though, he wants a strong labor market, which honestly we have been seeing, but I guess this month was a whole lot slower.
Well, and I guess, Frank, if you look at this, so we're looking at 178K forecast. We came at 150. That's light, but it's not devastatingly light. I mean, last time, remember, we got a revised number that came out almost 300K jobs. So that was a big surprise. But you add this in to the fact that we're getting not only, hey, labor's kind of close, and if not slightly cooler than what we wanted to see, or at least what the Fed wanted to see. And at the very same time, you get a tick up in unemployment. You get a lower than expected print in average hourly earnings. I mean, that's really important. If you're talking about combating inflation, wage growth is a massive contributor to inflation. So we've got a nice print here. We've got a reasonable print there. Again, I'm with you. I'm not necessarily, as long as this number is not massively higher or massively lower than the forecast, I'm fine with that. And then in terms of unemployment rate, this is going to, this 3.9%, all of these numbers coming in together, it's one print. So you always have to take it with kind of a rolling 3-month average viewpoint as we talk about. But this is a progress in the form of a slowing labor market, which Jerome Powell and the Fed in general have consistently pounded on how important it is that we get that. And here we are coming off of a dovish sounding, or reasonably, how we interpret it, pretty dovish sounding Fed on Wednesday. You combine that with a jobs number that's going to make them kind of be like, yeah, let's wait and see. I think stocks have a little bit of a runway. And Frank, I got to say, again, we were very wrong in the last few weeks about when we entered into stocks. I'm speaking personally. I know you took some, but I think I did worse than you did because you trailed out of some stuff. But I think we got it right this week. We are really on the ball with this S&P longs that we're both in.
Yes, and this breakout too on that. You're on the 4-hour, but also the daily, seeing that extra high above that significant trend line. If we can see a close above this would be very bullish.
Very good.
But if you want to switch to my screen really quick, I want to talk about the overall trend of NFP. You know, we talked earlier that there was a starch decline over time with these periodic spikes, but what we are seeing over the past year or so is a steady decline in jobs. which is what the Fed wanted at first.
Hmm.
Um, so seeing this like coupled with lower inflation is, I think, a really good sign. So these every time we see a giant pop in jobs, it's just not enough. It's just overall still a steady
Yeah.
decline. This is the lowest we've seen since, I mean, this is March 22. So here in November, we're at far less. It started at like 600 something K a
Yeah.
month. We're at
And
one.
Frank, think about this. If you're the Fed right now, and this is, my impression of it. Look at that chart that you've got on the screen and you say, okay, jobs are slowing. Inflation is slowing. The trends are in that direction. Not only do I think that they're probably appeased by that, they're probably just a tad bit nervous that all of this interest rate hike stuff that they've done, they don't want to break anything. So they're sitting there and like, okay, now the yields market has done some work and jobs are slowing. The not recession, but the economy seems to be cooling. The Fed is probably, in my opinion, going to start to, for the time being, take a back seat. They're not going to be so important to the market right now because now it seems that consensus is shifting that the Fed, as this big thumb on the fun, is not really as pressing right now. I mean, they're not necessarily threatening rate hikes anymore, and that gives, as you've got pulled up here, the yield potentially chance to fall lower, and it gives stocks, and by the way, gold bulls, same thing. It gives some runway to some of these other assets to have bigger moves. And I want to come right back to your chart here on the 2-year, Frank. One thing I will say for gold traders, we made this point. I did not think we would get here so fast, but if we break through this level on gold, again, I think you have to start asking yourself, has this been the move that I thought would happen much sooner than this? I mean, Frank, you've seen me kind of be on the wrong side of this thought process for a while. I thought that the rate cut conversation would happen a lot sooner. And the rate cut conversation has been and still is my thesis for being super bullish on gold too. Because if that starts to happen and you get a dollar that really weakens and gives some other opportunities for the euro to rise, for gold to rise, the pound to rise, we'll have to watch for that. But again, technicals, guys, watch for the breakout on that 2006 level. Frank, you've got the 2-year yield pulled up. What were you going to say about that?
I just wanted to mention how it broke underneath the trend line, and
Yeah.
I'm guessing the dollar is doing the same, just dollar weakness overall.
Yeah.
And my thesis on gold, I took a very small short trade
Mm-hmm.
while being long S&P just to see if we'd see more power in the indices and less optimism in the gold market. But after seeing this today, I
Yeah.
think well, I'm probably going to close out, and I might even look for longs now, just because we've seen this tremendous rise to the upside, breaking two very significant levels, prices back over 2,000. This could be a chance to see gold back up here in the 240s to 2050s or whatever.
Kenzo, I thought, to be completely honest, that we'd stay in this range, but this number today, it's hard to fight what
Yes.
we're looking at. We've got cooler numbers across the labor market. What's your opinion on all this? Do you have any trades on, and anything changed from our last time we've talked?
No, on my side, actually, I thought maybe the numbers were going to go a little bit higher, but they actually went lower. So fortunately, I did not really have trades because if you still remember, on Nasdaq, we were still actually on a buy since Wednesday. Since Wednesday, we were actually on a
Nice.
buy. So there was nothing much we can add on actually on Nasdaq. So, but I thought maybe the market was going to reach our resistance maybe before we see a nice sell, and that maybe might happen because the numbers that might be good, which is actually something which is very, very good. Maybe that will actually send a nice signal to FOMC not to increase or maybe just to pause with the interest rates as they did a few days ago.
Yeah, no, and that's, you know, probably a good point to make is you're looking at the NASDAQ right now. You're looking at a lot of these moves, and a lot of people are kind of starting to bet that they're overextended, you know, that they're starting to get. But I like the way that you've drawn that channel because again, it gives the NASDAQ room in that to continue a little bit, right? Because we've seen this week, if you're a fundamentalist, this was a smash hit win for kind of risk on sentiment. If you're watching the NASDAQ, and some people might be wondering, well, why isn't gold moving more out of all of this? Well, you kind of do have to think, you know, what gold has that stocks don't have, right? Gold can move much higher, much faster on geopolitical concerns, right? But risk on sentiment is not necessarily a huge driver for gold. That's why we're not really seeing the love for gold with all of this, you know, stuff. However, the dollar weakness today perhaps bring into question, can this dollar move higher? And you know, Kenzo, you and I in recent streams together have discussed the possibility that gold just keeps on running. And I personally am in the camp of thinking if this level breaks, right, that we could just continue to see gold pressure to the upside, especially if that dollar is going to start falling apart here, as it does seem like some of that story, that super hawkish Fed, is losing its edge. That's what the theme of today's stream has been: is the dollar losing its number one bullish driver, which is, of course, right now, a hawkish Fed that's threatening to raise rates. If that's no longer in the picture, what happens to gold? What happens to euro? What happens to the pound? What do you think in terms of that?
For gold, for now, I think it's actually a good buy, even though actually it's a bit higher. But I think it's actually a good thing. Plus, adding that NFP just went a bit lower. And as we know, I don't think maybe they're going to increase the rates on the coming meeting. Even though they said they still want to push it very low, I don't think they're going to push that much. So that is actually a good thing for gold. So remember, the inflation is still very high. And the only reason why we see gold, actually the dollar pushing up, is because of interest rates. That's the only reason currently. And that is actually not good as a safe haven. It's good, it's stronger, but it's not really as a good asset to invest in currently. For now, as we see all over the place, there is geopolitical news. I think gold can still push a little bit higher. I just don't know where it is going to stop, but I think we might still see gold still pushing higher. Unfortunately, this time is quite different to mostly they were not correlating very nice with other markets like DXY. Now at least they go hand. They actually opposite each other, which is actually a good thing, because before they were just going in the same direction. Now it shows that at least there is something happening. And if it keeps pushing lower, that's actually good for gold. We might see gold pushing up. But for the market, it's also a bit of a change there. We have Apple is not performing very well, or other companies they're not performing very well. That it's also a different story. I think we will see a sell actually on the index market maybe next week, after this heat wave of Nasdaq cools down. Next week we might see maybe a continuation of a sell, as we are actually on the downtrends on those markets.
Sure. Yeah, and as you said that, Kenzo, I was just looking at my S&P position, and I went ahead and just trailed my stop. You know, I caught this. I think you said you caught Wednesday as well, which congratulations to yourself as well. With this, I mean, that's been a monster move.
Yes,
Frank and I both bought indices, so it's nice to hear we're all in the same camp. And you know, Kenzo, we were talking about this earlier for the fellow indices traders. Frank and I, myself especially, got it really wrong on the initial push that the indices would get. But what I want to reiterate is that when you're a trend follower, especially in the nature of the way Frank and I tend to trade, which is trailing stops and that sort of thing, it's not about, you know, having a couple losses. it's all about, if you have those couple losses, but then you find the right trade can make all of the difference. So for me, I generally think that the indices have turned a new leaf, that there's potentially room to run into the end of the year with that seasonality, which we've discussed. And I also want to give credit to yourself, Kenzo. I mean, we both talked about this earlier in the week, how we generally were bullish on indices, and it's nice to see it play out well for us. So again, all it takes really, it's finding that one good move in the market and really making it count. How does ISM PMI affect indices? It's actually really important. PMI numbers, generally speaking, if you're an index trader, PMIs in some ways can lead directly to earnings growth across companies. Growth in services and manufacturing, respectively, right? We're going to get services here in a few minutes, actually about 1 minute and a half. Services PMI, companies that are in the service related industry are going to, of course, that is going to be impactful to their growth or lack thereof. So very important. PMIs are actually really important to stock earnings growth. They're not necessarily a perfect indicator, of course, because each company is somewhat unique, but across the broad scanning board can certainly be very, very important to that. We are coming in, guys, 1 minute away from the PMI numbers. Thank you to everybody who stuck around with us for this stream. We've been going for about an hour and 45 minutes. I want to thank you guys for being here. We've got more stuff coming, so don't go anywhere. Again, PMI is coming in 45 seconds. Remember to like the stream if you guys are enjoying what you're seeing here. We put a lot of work into these streams, and are very thankful to our audience for making them possible. You guys being here allows us to have sponsors, allows us to, again, be present on YouTube and supported financially to even be able to do these shows and have everybody involved who is involved. So coming in about 20 seconds out, we are going to be getting our PMI numbers, which we've got gold top left, euro down here, dollar top right, and S&P bottom right, guys. So keep an eye on whichever chart you'd like. These are 15-minute candles and breaking news. All right, let's see if we get any market moving news from PMIs here in just a moment. I'm keeping my eye on the dollar index. Dollar index, a little bit of a blip. Gold moving higher. Look at that wicking candle there. Not too much of a move. Let's see what PMI numbers came out to be. 51.8. That is a miss on the PMI numbers. And you could take this how you'd like to. You could say on one side, hey, that shows, slowing economy. The Fed's going to like that. And then you could also say, hey, that's showing slowing economy. That's not good for stocks, right? But again, I think a cooling economy is not necessarily the same thing as a crashing economy, right? So in some ways, is that dollar bearish? Yeah, continues to be a slow in the U.S. economic side of things to complete what was already an economically slow day to day as we got jobs numbers that were cool. Again, continues to complement the dollar bearish thesis, I would say, today.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free Edge Finder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.